This is Lindsay McDougall on ABC Illawarra.
That is where you are right now. And you may have heard Tahmoor Colliery, the Tahmoor mine, being talked about quite a lot today in the terms of a story involving an Indian steel magnate, a Queensland-born billionaire, and this GFG alliance, which is kind of in having problems at the moment. Also, the Whyalla Steelworks has been involved in this. It all has a lot to do with Sanjeev Gupta, who has been, helping out a bunch of failing smelters and mines around the world. He's turned them into profitable operations. However, a lot of that profitability came from a person or a company who was funding this to the tune of $6 billion. And that person and his company, Lex Greensill, has gone into administration. We're going to find out a little bit more about this because there's a lot of it that I don't understand, but it feels like it's pretty big. When we're talking $6 billion and the Tahmoor mine is involved, we're going to find out, well, how safe Tahmoor mine is and get to the bottom of that very soon here on ABC Illawarra.
Across the Illawarra, Shoalhaven and Southern Highlands, this is ABC Illawarra.
Okay, so a Queensland-born billionaire, Indian steel magnate and a Tahmoor mine all walk into a bar. It's not a joke. It would be a steel bar if they did, though, because their future hangs in the balance, and it does have to do with steel. So you may know the name Sanjeev Gupta. His company, GFG Alliance, owns Tahmoor mine, and the coal from that mine is sent to the Whyalla Steelworks in South Australia, which Gupta also purchased in 2017. In fact, he purchased a bunch of stuff a few years ago, a bit of a shopping spree, purchased a series of failing smelters and mines and turned them into profitable operations, kind of by combining them all, using them all together as some kind of Megatron, Captain Power style thing. But it turns out that the Queensland-born billionaire in this joke, Lex Greensill, was funding Mr. Gupta's shopping spree, and now the money is kind of run dry. So, if Mr. Gupta has no more money to run the smelters and mines, what will happen to Tahmoor Colliery, and why does it still need funding from outside if the idea was to get these ventures to profitability? Well, independent financial analyst, Martin North, may have the answer. He joins me now. Hello, Martin.
G'day there. I'm not sure I've got the answers, but I can help guide the questions.
That's what I want to do. Okay, so can you take us back a few steps? I've heard of Sanjeev Gupta, very big in the UK as well as in India and in Australia. But who's Lex Greensill, and how did he come to be financing Sanjeev Gupta to buy all these mining assets?
Well, we know the old phrase about follow the money, right? So Greensill is a very interesting operator insofar that he started out basically in the factoring business. Factoring basically is allowing large companies to get paid for their invoices quickly whilst allowing credit for people to flow through the other way. So basically, it's inserting yourself in the middle of those sort of transactions.
Of an invoice.
It's a huge global business.
Right.
Yeah,
so you pay people's invoices so they don't have to
factoring.
wait, and then the people who owe you the money, owe them the money, pay you that money plus a bit more, of course.
Sure. Well, that basically, yeah. So you end up getting a little bit less today, and 90 days, 120 days later, So that's the essence of where they started, right? Now he also realised that what you could do, a bit like the global financial crisis all over again, you could bundle up these transactions, right? And you could therefore sell them on into the financial markets, and you then get investors to basically buy them, and that created this huge pool of funds available, right?
Buying the invoices, buying the debts?
So the debt is cash flow, right? So basically what it means is that the investors will say, oh, okay, I'm happy to pay you something for those now, and I know that they'll get settled in 90, 120 days. So it's called financial engineering, right? And it's the heart of the financial system, and it's where a lot of things go wrong, because what happens then is you've got this generation of all this money, and then, of course, Greensill then said, well, okay, now I can go and lend massive amounts of money to other people, and that includes, of course, the purchases of the steel asset. And interestingly, this whole thing was supported by a bunch of insurance policies. Those transactions were insured. The thing that fell over first was the insurers got a bit worried about what was going on because they couldn't necessarily understand what was happening. And so suddenly the insurance bit fell over. That meant that the transactions themselves started to look difficult. As a result of that, the cards fell further, and then Greensill said, we've got issues, and that means, of course, that the likes of Gupta, suddenly their funding sources, and they had huge flows of funding from this entity, suddenly stopped. So that means that all of these steel assets around the world, so British steel assets in the UK, steel assets here in Australia, suddenly lost their funding. Now, the interesting thing is, of course, that the price of steel is actually quite good at the moment. So a lot of these entities were beginning to look reasonable in terms of their performance. But if, in fact, the source of funding suddenly gets taken away, then, of course, all bets are off. And that's, frankly, where we are at the moment.
So why did the insurance companies get spooked? Was it just because of this giant amount of money going from Greensill to Gupta, or was it sort of too focused for them? Did it sort of look a bit...
Well, you got to understand that these are both private entities, right? So the level of what's called disclosure, in other words, how much information they share about the way their business works, is a bit below perhaps a publicly listed company. And I think probably what happened was they started to ask questions about the insurance policy renewal, because you have to renew these things on an ongoing basis. And they didn't get very satisfactory questions, and the more they asked questions, the more they started scratching their head thinking, we're not sure this is quite the way that we think it's working. And I think they probably got to the point where they said, well, actually, no, we don't want to, we can't renew the insurance. And of course, at that point, then those securitized transactions became invalid, and then the whole thing fell over. The analogy I use is dominoes, right? So one pops over, and then a whole bunch pops over, and downstream, lots of businesses then get hit. So, but that's the critical. And of course, now the question is, can that be salvaged? So, can they find another insurer? Right? Not sure. Can the details be sufficiently validated and shared so that effectively people get more confident in the underlying assumptions of the business, or is it another set of schemes on schemes on schemes where the underlying assets and the total liabilities just don't add up? We don't know yet. This is a private company. We don't know. But the implications for Australia, and indeed for other steel handlers around the world, are pretty concerning, because this could go really pear-shaped quite quickly.
Yeah, so the thing I know about Sanjeev Gupta is a very successful businessman. Why did he need to get this cash flow of $6 billion with a B dollars from Greensill in the first place? Is that just the way the business happens at that level? Well,
I think it's partly that he was growing by accumulating more businesses.
Right.
And the old adage is sometimes it's actually the quickest way to grow is to buy other businesses and bolt them on and bolt them on and bolt them on and get bigger and bigger and bigger, right? Because then everybody assumes that you're doing really, really well and everything's fine. Now, you may well be, but nevertheless, you've also got to run each of those businesses successfully. And of course, they need borrowing to be able to invest and to modernize. And there was a lot of that going on. So it may well be that those steel businesses are still actually in their own right perfectly okay. But if they're not able to get the funding from another source, and perhaps they can, maybe that's going to be an issue. And of course, it's not only the availability of funding, but also the price of the funding as well. So it may be that the deal that they struck was a particularly advantageous one, because there was basically a mutual benefit to both of these private entities who were supporting each other, right? In the light of public disclosure and those things, maybe those transactions wouldn't have happened in the same way.
I should say that Tahmoor, the owners of the Tahmoor mine, have said the GFG alliance as a whole is operationally strong. They said while Greensill's difficulties have created a challenging situation, as you've outlined very well, Martin, it has adequate funding for its current needs, and discussions to secure alternative long-term funding are progressing well. So the price of steel would help this. And do you think the fact that these companies have had this big cash injection over the last few years could help these much smaller companies to sort of work as an alliance without without the injection of cash from Greensills?
Well, my sense is, and it's only a sense because there's very little public disclosure as to precisely what's gone on here, but my sense is that the investments that have been made and the modern thinking about how to get steel to work more effectively and efficiently it is still there. And there's huge demand for steel. Steel prices around the world are very strong. That must be a really good positive for it. So I would have thought that likelihood is there will be an opportunity to find alternative funding sources for at least some of those elements. But of course, it's all like spaghetti. It's all sort of scrambled up in these very complicated relationships. And so there's very much an important teasing apart to be done, a restructuring to be done. But the underlying businesses appear to me to be relatively viable at the moment, and that's good news, I think.
And as you said, these aren't public companies, so it's not like the stock market is having a go at this. That's not sort of happening.
Well, certainly that's not publicly listed.
Right.
I'm sure there will be people like hedge funds and other
that's what I was thinking.
financial engineers,
like betting against the companies and things. Yeah.
Well, maybe that, or maybe they're thinking that they can step in and make a turn. Remember, all this financial
GameStop.
engineering.
Yeah, sorry. Yeah.
It is a bit like that.
Yeah.
The problem with this is we're in this situation again where there are players who will always look at the opportunity to try and make a turn to actually, generate funds. Financial engineering in its own right becomes really concerning because you then lose sight of the fact that you're investing in underlying business, right? Financial engineering is where all the smart money tends to go to. Unfortunately, quite often it goes wrong, like the global financial crisis. We're going to see more of these sorts of things happen, I think, ahead as, for example, bond rates start to rise and some of the other things that are changing in the financial markets. So this is, to me, an early warning sign of we may see more of these cracks in the system ahead.
All right. Well, it'll be interesting to see what happens, and we'll, of course, keep an eye on it here, as I'm sure you will as well. Martin North, very good to talk to you about this. Thank you.
Good to talk to you.
Cheers. There you go. Martin North, independent financial analyst and someone who is helping us get a head around what is happening with Greensills and Gupta and the GFG Alliance. You're listening to ABC Illawarra.